Should you use basic or diluted shares for market cap calculations? Imagine you're trying to find out how much a company is really worth. You might think just multiplying the current share price by the number of shares you see on the stock exchange is enough. But there's more to it. When calculating a company's market capitalization, you need to consider all the shares that could potentially be out there. This is where the difference between basic and diluted shares comes into play. Basic shares are simply the shares currently held by shareholders. They don't include any shares that could be created in the future through things like stock options, warrants, or convertible bonds. Diluted shares, on the other hand, include all these potential shares. They give a more complete picture of what the company's total ownership structure could look like if all options and convertibles are exercised or converted. Using diluted shares for market cap calculations is generally the better choice. Why? Because the stock market already factors in the possibility of these additional shares. If many stock options are in the money, meaning their exercise price is below the current stock price, they could be exercised soon. This would increase the total shares outstanding and dilute existing shareholders' stakes. If you only use basic shares, you might underestimate the company's true value. Financial reporting standards also recommend using diluted shares for key metrics like earnings per share and market value of equity. This helps investors get a clearer picture of the company's real worth and ownership distribution. When trading stocks and options, understanding potential dilution is important. It affects how you see the company's valuation and can influence your investment decisions. For example, if a company has many stock options that are likely to be exercised, the actual number of shares could grow significantly. This would lower the stock price and change the ownership landscape. So, in most cases, you should use diluted shares when calculating market capitalization. They show the maximum potential number of shares, giving a more realistic view of the company's total value. This way, investors and traders can better understand how potential securities might impact the company's stock price and overall valuation.